So write down those dates, September 5th, September 9th, September 16th, 17th, 18th, 19th, 20th. All those days could go down in history as Black Day events, meaning like a Black Friday, September 5th, Black Tuesday, September 9th, and so on. So basically, I'm going to break down to you this scenario that is completely not priced in right now. It basically spells severe trouble for the market in the month of September 2025. Now, I'm recording this on September 1st, and I'm here to tell you that this week is going to be ugly for the markets. Now, specifically, every day, the market's going to be monitoring some economic data, beginning with tomorrow, September 2nd. Every morning, around 8:30, we're going to get in some kind of piece of evidence as far as economic data concerned that could steer the Federal Reserve towards cutting rates. Now, it's also important to look at the context at any time you're looking to put together some crazy, wild trades. And most of these trades, guys, they're going to be happening in the opposite of where everybody believes something is going to go. So, the most important fact to consider is that Wall Street is positioned for a rate cut. And it's not the rate cut that is actually in focus that makes Wall Street so bullish, but rather than this sequence of cuts that follow. So basically, the market is trading at all-time highs or within a few points of all-time highs because the rate sequence of cuts is already priced in. That's the only reason the market is even holding up these levels. Okay, besides the AI sector that clearly is holding up the market as well. But between the view, the consensus view is we're going into a rate cut cycle. I would argue exactly the opposite. We're not going into a rate cut cycle because of the following things I'm about to explain. So it's important to review what transpired during the Powell speech, the last Powell speech. I think the market has really misinterpreted to a great extent what Powell said. Powell said, without using the word stagflation, that Federal Reserve acknowledges stagflation to the point that they understand fully that inflation is running away, but they're focused on the problems in the job market, and therefore they're looking at a possibility of cutting rates in September. They didn't say we're going to cut rates, but what Powell said specifically is they will be data dependent, particularly this week, September 2nd through September 9th. And the reason I'm saying September 9th is because September 9th could go down history as the biggest acknowledgement of job report fraud. In other words, we're looking on September 9th at potentially the greatest revision of job numbers in the history of all revisions. So, from a standpoint of the economic data points, September 2nd through September 9th will determine what Federal Reserve will do on September 16th and 17th meeting. Now, the reason I've included some of the dates beyond the Federal Reserve meeting, clearly such as September 18th, 19th, 20th, is because a lot of the initial reaction to what will be announced at the September Federal Reserve meeting, they may take a few days to play out in a big way. So basically what you're looking at is September 1st for September 20th is a possibility of one of the biggest drops. You could look back at the April drop and think, oh my God, yeah, I remember that, man. Shit was really just falling apart. And I'm telling you that what we could be seeing between today and September 20th would make that what was happening in March, April, earlier this year of 2025, it could make a move that's going to be greater than that. So With that said, in the next 20 days, the market could drop by as much as 15-20%. Now remember, the 20% drop that happened early in the year took place from February, which we actually predicted as the fucking top of all tops, and then the market drops 20% from that. What I'm saying is it took 60 days for the market to do it back then. I'm telling you, it could take 20 days for the market to do it this time around. Now, here's what something is brewing clearly to me and to our traders here at Third Market Moves that it's not yet apparent to Wall Street. Last job report, and the reason I'm talking about the job report because this Friday, the 5th, September the 5th, we're going to have what will be argued is one of the most watched economic data point of 2025, because ultimately Federal Reserve said that's what's going to determine whether they're going to ultimately cut rates in September or not. Well, if you recall, during the last job report, Trump was very unhappy and he fired the person in charge of the job reports. So what's happening now is I think the market is expecting that the job report is going to be weak this Friday. And I would argue exact opposite is going to take place. Otherwise, Trump will just look like a fool. And I don't think Trump ever likes to look like a fool. So chances are that even if indeed the economic data is bad, what will be reported this Friday during the job report is going to be a number better than was reported last time. Now, I know this is counterintuitive, but a good job number is actually horrible for the prospects of the rate cut in September. So you have a situation, you have two forces in play here. You have Trump and his ego, and the reality, okay? And so Trump's ego, I would argue, is going to produce a good job report this Friday. Now, even though we all know that the reality is very far from good economic data, but I would bet that we're going to get a job report that's going to look better than the last one. If the Federal Reserve, Powell, if what he said in his Wyoming speech, if he really meant it, that means no rate cut. No rate cut is not priced in by anyone on Wall Street. As a matter of fact, some people believe there is a 99% probability of a rate cut in September. Now, the reason why this is so important is because when the entire market is positioned for a rate cut, and to me, there is overwhelming evidence that we may not be getting the rate cut, and I'll elaborate on that in just a second a little bit more. But it means that the entire market will have to reposition. The conviction level of the rate cut is so high, every Wall Street firm, hedge fund, and pension fund, all the market participants are positioned in their portfolios expecting a rate cut in September. What do you think is going to happen if there is no rate cut? Well, the argument is simple. They will have to reposition. And that is why you're going to see similar movement in the market to that of March and April 2025. Why did we get such a huge sell-off between February, March, and April? Most of the people are going to say, well, it's the tariffs. Well, the tariffs was just a little, addition to the fire that already begun. It wasn't caused by tariffs, but it was caused by market overwhelming allocation, betting that the upside in the market was going to be untouched, that the tariffs are not going to be as bad. Basically, the entire market positioning was one way. And when they started realizing, well, shit, things are not what we calculated. Notice again, market position into the moon in one direction, and then they realize, oh shit, things may not be as what we calculated. I'm telling you, this scenario is identical now. The market is positioned in one direction all the way to the moon, and the expectations are identical. The calculations are such that once the market begins realizing, as early as tomorrow, as late as this Friday, and the final straw is going to be on September 9th during the job numbers revision for the year, the market is going to realize that things are not possibly what we calculated them to be. And that entire positioning that was built over the last few months in the expectation of not just one rate cut, but the rate cut cycle. Okay, it's the pivot, right? It's transitioning from no rate cuts or higher rates and no rate cuts for some time into a cycle of rate cuts. Well, we're not going to get a cycle of rate cuts, and that's a fact. Let me explain that. If Federal Reserve, okay, if for whatever reason, I may be wrong on the fact, and somehow they'll put a gun to Powell's head and they're going to make him cut the rates anyway in September, Powell is not going to want to cut rates, okay? But can they twist his arm to cut rates? At this point, I think it's self-evident that there is a probability that should be assigned to that. But if he does cut rates in September, which I think the probability of no rate cut is at like 90%, and Wall Street is positioned to where the probability of a rate cut is 90%, right? So the way I'm looking at probabilities, based off the sequence of moves, based off behavioral patterns, based off, some of the political setup that's happening, the probability of no rate cut in September is much higher than the probability of a rate cut in September. But if they do twist Powell's arm into cutting rate in September, what happens next? Inflation runs fucking higher. So what happens during the next Federal Reserve meeting then? They're not talking about another rate cut. They're talking about rewinding everything backwards, because the inflation could literally just start going to the fucking moon, and it will get everybody's attention. And so that will put an end to what everyone's pricing in, which is not just a rate cut in September, but a rate cut in cycle. A sequence of 5-6 rate cuts will be canceled as early as October. Now, the reason I'm so confident in that is if inflation spikes higher, what you're really looking at then is a serious bond market problem, okay? And speaking historically, normally when Federal Reserve does cut rates, your mortgage rates come down. A lot of interest rates, products, they come down in rates. Bond yields, which are basically the rates that bonds pay, they come down as well. But that's not what happened last year. Remember, last year in 2024, September meeting, Federal Reserve cut 0.5 point. What happened to the rates? Mortgage rates went up. Bond yields, they went up in the long-term bond, like TLT, 30-year bonds, /ZB is the ticker for those, for trading options on futures, guys. The rates went higher despite of the Federal Reserve cutting rates. Now, since then, the probability of inflation, because of the big beautiful bill, because of all of these politically driven inflationary moments around the world and situations, they're only escalating. So you cannot cure, I've said it many times over the years, you cannot cure politically driven inflation with monetary policy. So that's why when the Federal Reserve cut rates last time, the market has priced in even a higher probability of inflation running to a level that's quite dangerous. So if Federal Reserve does indeed cut rates in September, the probability it will already be looking at reversing that decision or pausing the rate cut cycle that is fully priced in right now in the market is huge. So between September and October, you can have a transition where Federal Reserve comes in October and says, hey, fuck, we fucked up. We should have never cut rates. Inflation is out of control. And we're pausing. We're not cutting rates in October. As a matter of fact, we're not even cutting rates in December. Okay, we're not cutting rates at all. We may actually think about hiking rates again and take that quarter point cut away in September. Now, you see how stupid that sounds like. Why would Powell put himself in a situation like that? Because basically the September cut, if they twist his arm and put a gun to his head, will translate into Federal Reserve looking completely incompetent in the months of October and December. So why would the Fed take a chance on that? So that's why I'm saying the probability of no rate cut in September is way the fuck higher than and it's not priced by 99% of the Wall Street doesn't have it priced in because they are pricing in a rate cutting cycle, which has 0% probability of happening. If you understand stagflation, if you understand inflation, this shit's got 0% chance of happening. Okay? The only way that will happen if they will make economic data numbers official, like all United States economy is falling off the cliff, then yeah, Fed will call an emergency meeting and they'll be cutting rates in that case. But as long as they keep reporting these bullshit numbers, ain't shit gonna happen, okay? The inflation's gonna keep running higher. They're gonna keep telling you how great the economy is, and then, the Fed is just gonna look stupid as hell if they use those data inputs to make rate decisions. So my argument is simple. The market could easily erase all the gains that were made since April because of the current positioning, because of the current expectations that the market is being valued. All of that could be gone anywhere between tomorrow, September 2nd through September 20th. But, if I was to put a super huge bet, which we partially already did, and we're going to keep building a huge fucking monster position before September 9th, I would put September 5th of September 9th as potential Black Friday, Black Tuesday. Potentially we could get a sequence. Black Friday, Black Monday, followed by a Black fucking Tuesday. So that could be 3-day sequence of a move 333, and the significance of that 333 sequence is each day there's going to be even a greater move expansion to the downside, ultimately probably where they're pausing the market because it's dropping so sharply where they have to involve the circuit breakers to pause it for 15 minutes before the market resumes. Basically similar situation that was happening during the COVID crash, where multiple times the circuit breakers had to go into effect. So that's what we're looking at, guys. I mean, that's the big bet. But again, you don't go in shorting or building your position when it becomes absolutely apparent to you, oh shit, Leo was right again. It looks like the market fucked up. They were pricing a rate cut. It looks like now they're pricing it, there's going to be no rate cut. And I mean, the market could fall the fuck out completely. And guys, you got to build your position ahead of the drop, not during the drop, ahead of the drop, which is why we shorted the fuck out of the market Friday. We shorted it last night when the options opened for trading on Sunday at 6 p.m. We shorting it today, and we're shorting it fucking basically every day of this week. option pricing varies, so it makes sense that you add to your put positions basically daily. And thank God if there is some kind of bounce that you would add bigly on the bounce to your put positions. And, gold trade is already running high, guys. I've recorded a few podcasts about the gold prices. Gold, like the only thing in stagflation that goes higher is gold. So gold is going to continue rolling higher. It officially set last night, traders don't like to keep positions over the holiday weekend because they think, it's a long weekend. There's no way to get these options pricing right. What if this happens? What if that? Well, what if you just fucking forget all the little ifs and bullshits and you just go and bet on fucking stagflation, which is buying gold calls, which we did on Friday, and we did again last night. Gold opened last night at 6 p.m., 10 points lower. And I'm sitting there thinking to myself, well, goddamn, this got to be the greatest bullish pattern of all times, because recently what the market's been doing is it drops at the open, right? And then for the rest of the day, it goes higher. So gold did the same pattern yesterday. It dropped 10 points, and then it rallied 62 points higher after that, taking all-time highs in gold. So, guys, the trades are simple. You short fucking everything, and you stay long gold. You buy gold calls, you buy puts on every fucking else that is you can possibly short, you can possibly get your hands on. So, well, clearly VIX calls as well, right? So VIX calls, gold calls, puts on everything else. But guys, I mean, this temporary mispricing by the market of the current market conditions, I mean, that's your entry. I mean, that's the kind of stuff you gotta sit there as a trader and realize that, hold on, the whole market is fucking wrong. What they're pricing is wrong, and they're gonna be unwinding their fucking positions in a big way, and I get to see it days before it even happens. And how the guys I'm trading with, dude, all of these guys are about to go to the fucking moon in their accounts. So, because seldom the market is so mispricing what is so apparent, to somebody like us at 13 Market Moves that pays super close attention on a daily basis what's happening to behavioral patterns, the sequences, and so on. So, guys, get sharper on your 13 Market Moves sequences, review the course, study the patterns, study the time frames of the day for your entries, exits, for daily trading, for swing trading. Get that down pat, go review that stuff, get it done, be ready, position on the right side of the market, and go fucking big. And if you don't have the balls to go big, at least get in touch with a coach who's going to help you go big at the right fucking times this week and next week. Now, the last thing I want to say, the September 9th job revision number, I mean, that could be huge because, again, we may have a setup where they're going to masquerade the job number on Friday, right, and make it look good, which is basically what I'm saying is going to happen. But then the follow through on September 9th, when all the job revisions are going to hit for the year, I mean, that could be ugly because I can't figure out a way, how can they masquerade all damn job losses, because they're going to be astounding. Just to give you a reference point, last year in 2024, on the Biden administration, there was an error to the magnitude of almost a million jobs, 920,000 jobs, guys, they misrepresented. So between January and August last year in 2024, every job report had an error of about 100,000 jobs, over 100,000 jobs. So basically take 920,000 divided by 8 months, you get over 100,000 every month in 2024 that was reported. Basically, we were fucking lied to. Okay, every report that came out with 150,000 jobs, the real number was like 20,000 jobs. And they kept fucking doing it month after month after month after month, fucking putting out these fictitious reports that were just full of garbage and lies. My argument is on September 9th. I don't know, because the situation now is much more dire than it was in 2024. So, I mean, the combined job losses could be 2 million, which would make every job report that was reported this year negative. So you could have a huge move on Friday, September 5th, because the job number that's going to be reported is going to look good. But the main revisions to the entire job situation is going to be on September 9th, which is going to be on Tuesday. So a lot of things could be happening between September 5th and September 9th. So you should, if you run a business, you should just tell all your employees go home, and September 5th through September 9th, you don't do nothing. You just sit in front of your computer screens, have all your phone, have everything ready for trading. You shouldn't be missing a moment of trading September 5th for September 9th or September 10th. So take off for 5 days from your work. Take off, just go on a vacation, whatever you got to do, to where you can just lock yourself in a room, sit in front of your screens, don't do nothing else, okay? I mean, work out, so you can focus better. You just really need to focus. September 5th for September 10th, you just really need to focus on the market and do nothing else. Because if you do that, I mean, you can make millions just within those few days. So, and if you don't know how to do that, if you don't know specifically what to trade, what strikes, how to fucking do it, then you get in touch with us. Guys, you should get in touch with us today, Labor Day, okay? September 1st. In preparation of what's about to take place, which, by the way, I'm emphasizing September 5th for September 9th, but it could begin as early as September 2nd. So, again, you want to be in front of the move, not in the middle of the move as far as your entry is concerned. I don't know anybody that made big money trading the move in the middle of the move or post the move. You have to be in front of the big move. So get it done today, okay? Put on these positions as soon as possible. You should have been putting your positions Friday. You should have been putting your positions last night with us at 6 p.m. You still don't have positions going into this week based on information again. You need to get it done now. Right fucking now. So the last thing I'm going to mention is the correlation between gold and crypto. It's becoming pretty apparent that they are in a very precise negative correlation moment at this time in the market. So I would say short the fuck out of crypto. Crypto is about to collapse. Even Solana, even like old favorite stuff like Solana, that one could actually collapse by more than a lot of other coins. Everybody's looking at dominance chart between BTC and Ethereum. They say, well, that shit's about to flip the switch and Ethereum's gonna go to the moon. Ethereum is already at the fucking moon. And to keep betting it's gonna go to the moon this month I think it's insane. But there were people that will absolutely do it, because why? Well, Tom Lee says Ethereum is gonna be 60,000. Yeah, well, why don't you have your own brains, okay, and do some basic math? Maybe at some point Ethereum will be 60,000, but it ain't like Ethereum stopped out right under 5,000. I recorded the pocket. We were entering ETH puts at 49.50 last fucking Sunday. Okay. So we nailed that top, and that's going to remain to be the top for the month of September, guys. All right. So I explained to you the context of Wall Street, over positioning in one direction, and once they realize their calculations are in error again, just like they were in February, March, April, then we're going to get a similar move, but this time it's going to happen within a short amount of time, and it could be a greater move than what you've seen between February and April. So guys, as a trader, these are super exciting times as a trader. And if you were to pick any time in your life to trade, I would say trade in September, October, November, December of 2025. That would be it. I mean, that's it. You may not see this sort of market that is so stupidly mispriced, and people get in the direction or the outcome of the Fed rate decisions. Very rarely do you have so many people be so fucking wrong on the market. So all of these positions are about to unwind. You're going to see crazy wild moves, and nobody's prepared for it. So I'm trying to prepare you for it so you can grab some of the biggest trades of your lifetime as an options trader with 30 market moves. So guys, you know what to do. Get in touch with your coach. Lightning fast today, September 1st. Be ready to roll and trade like a rock star in the next 20 days. And create conditions for yourself to where nobody's bugging you, to where you can have full focus, at least between September 5th and September 10th. But, ideally starting today until September 20th. Just put everything else on the sidelines. Just focus only trading next 20 days. And I promise you, this is going to be the biggest victory in your life when it comes to trading financial markets. Anyways, guys, let's roll. I hope a bunch of you that understand this message will be hitting $1 million, $2 million, $3 million, $10 million plus in the next 20 days. Let's roll.